Hello guys, my name is Gavin Panu. I will be the host of this webinar. This webinar is by M-Trading. So today's conversation is about market. We're going to go into market analysis, but how do we use macroeconomic data and the news? Trading fundamentals and macroeconomic data specifically with our technical setups. So the first key point is, on a daily basis, the first thing you should be looking to do, or even on a weekly basis, is to check the economic calendar. So our lives with trading is along the lines of the economic calendar. So the economic calendar does determine whether we take a trade or not at that final hurdle. So you could do all the analysis you want, but if you take a trade and are not aware of a specific news that could that is significantly correlated to that asset, it could reverse and hit your stop loss instantly, purely from not knowing what news is being released at that current time. So looking at the economic calendar, or looking at earnings, earnings released by companies is extremely important. Okay, so we'll go specifically into sort of geopolitical type of news and the economic calendar. So let me just bring up something in front of you guys. Okay, so what we have is M-Trading's website. If you use M-Trading, it is a great source to understand the Forex calendar, along with have an idea of what is the sentiment behind certain impacts from news. So I use this on a daily basis, go into Forex calendar and go through that day's news. Naturally, if we're looking at a specific currency, you need to know what its correlated currency pair is doing. Yep. So what that correlated news event is taking place for that day. So check the time first. You need to know what time that news has been released, along with what currency it will have an impact on. So this will show you which country it's affecting. And then you have the impact level. So naturally, I would say concentrate on the ones that are high to medium impact news. That's the one in red and the ones in orange. So therefore, those news will have a specific impact to those assets. In addition to that, you need to look at the event itself. So what is that event? Yep, so understanding those events is key. So if you have never seen the economic calendar before, then a task for you to do is go back and look at 1 month or 2 months worth of calendar news and go through each and every one to have a better understanding. Yep. Okay, so what is being released? So there's 3 key important data that's released. So the first we know is what is the previous. So what was released the previous period. So it could be previous quarter, it could be previous month, it could be the previous week. So some news are based on a weekly basis, some on a monthly basis, some are quarterly news, some are yearly news. So that's the key point there. So this is showing us the previous. So what was the previous result of that particular news? So let's take, for example, this one here. So this morning at 9:30 a.m. for sterling, we had construction PMI. Okay, so that construction PMI is giving us a better indication of, so it's showing us what is the diffusion index based on surveyed purchasing managers in the construction industry. So what does that mean? It's a leading indicator for a start of economic health. So businesses will react quickly to market conditions, and their purchasing managers will hold perhaps the most important and relevant insight into a company's view of the economy. Yep. So another key point to mention is if we have above 50, so if it is, where is it? So there we are. So if the actual is above 50, it generally means industry expansion. So it is positive. Whereas if it's below 50, it is seen as excuse me there, contraction, guys. So that naturally you want expansion, so anything above 50 is showing us positivity, whereas below that 50 level is showing us contraction. So in this instance, we was looking at a forecast of 51. So 51, similar to the previous, so in line with the previous, just below that previous value. The actual data that was released today was 48.1. 48.1, guys. So that is a negative news there. Just based on that, you should be able to view that, okay, sterling is going to show some weakness today. And overall, if you're looking at currency strengths, sterling was one of the weakest currencies today. Okay, so what else do we need to know? I would say is if you're looking at, okay, taking a trade just based on this and then taking those trades, your hit rate wouldn't be as high. So you wouldn't have such a high hit rate purely because there is a lot more that goes into this. Yep. So if it was as easy as this, then everyone would be trading in this approach. Now, to the most difficult aspects of trading the news. So the first key point I would want to mention is the sentiment. So it's one thing to know that, okay, if the sentiment, assuming that, okay, so we'll look at the next data. So at 10 a.m. for the euro, we had PPI year over year. The forecast was 2.3%, the previous was 2%, and we had a positive data of 2.5%. So we'd naturally see a positive move in the euro. But if we do not see that positive news in the euro, that's largely due to the sentiment behind the traders. So it's important to know what are traders' views. Yep, so other investors and traders, what are their views leading up to this news? Specifically, you want to go into is to understand sentiment and news is you need to go into Bloomberg articles, Reuters, looking at trading news. So these articles will give you better understanding of what is the sentiment behind a certain news that's being released. I've seen many times that, okay, the data can be positive. So as we've seen, this is 2.5%. It could be positive, and we actually see a negative move taking place in that particular asset, for example, the euro. And that's largely due to the original sentiment was that we would actually hit the 3% level. So if the sentiment was that, okay, we are expecting a 3% level to be met, but we are below that level, so we're at 2.5%. Even though we beat the forecast, we haven't beat the sentiment's view. So therefore, a lot of the larger traders will be selling into this market. So that is a very strong correlation between the news and sentiment of that news. One thing I would recommend is look into M-Trading's fundamental analysis. So go through M-Trading fundamental analysis, read through what is the impact for this week. So what are the highlights for the week? So it's a great, some great articles in there. Yep. Okay. And to my final part is the final part to trading the news and understanding macroeconomic data. So the first part was looking at the results. So looking at the result compared to the forecast and its previous, understanding that news of what it means. So why do traders care about that news? And then the second part to trading the news is the sentiment. Gauging better sentiment of traders will definitely help in giving you a better, higher hit rate in taking trades with the news. The third part to it is backtesting. So just going back into that previous, if I just bring into where, okay, so going back into this, and then you go into, well, you do have market sentiment over here, guys, so that's very important, but Forex calendar, if you go back into Forex calendar and you're looking at this data, what you also want to do is what was the previous result. So we already know the previous results for, say, construction PMI, which was 51.1, but what was the previous 3, 4, 5 months worth of data? Yep. So leading into that, is that overall positive or negative? So to do that, you can also even look at, by clicking into this link, you can see the previous data. So this is showing you all. You may want the last 6 months. So you can see that in the last 6 months, it's been in a decline. So it's been overall in a decline. So overall, the sentiment in this construction PMI has been lower and lower and lower. Yep. And let's just check also the PPI. Okay, so you can see that this would have had a larger move. Just if I just go into the most recent, so the previous was at that high of that 4.3 level, then it was reduced to 3.4, going down to 2.4, and then down to 2. And the most recent one, so there was a downtrend within this PPI data, which is based. This is based on year over year. Most recent move has been higher, so this will have a larger impact in the markets purely from turning. So the original expectations were down. Over the overview on the longer term on the back testing is it has been down. The most recent data has shown a positive, an uptick within this graph. So that's also very important. Looking at the previous news results along with back testing it, and I wouldn't go as far as I would not just look to do this type of analysis. I would actually go back as far as looking at the chart itself. So going onto the chart and correlating the last 6 months worth of data to understand, okay, this is what's happened on those particular dates. And even look at the longer term impact. So if you can highlight specific areas, specific times when this news was released for each prior month, and then understand, okay, what did it do for the whole month? Did it continue lower or did it continue higher? So that way you can build your economic view on the in the markets. Okay, charts wise, then the final part to trading the news and understanding the news and taking high probability setups with news is then your technical analysis. Yep. So going with a simple example as cable. So we're naturally going to be on a smaller time frame. So you are trading the news, guys, that is based on a smaller time frame. So look for key levels. Look for this. If I just zoom out a little bit, so I'll be looking for key levels, looking for support, resistance, trend lines, and so on. Yep. Naturally, you could even work from a higher time frame. So look at a higher time frame. What has been the overall trend? Yep. So look at the overall trend. So let's put in some support and resistance levels. So key level resistance is this area here. So hit this level, rejection, again, rejection, again, rejection. Then in addition to that, do we have any support levels? So there is some support at resistance at this area. So resistance, resistance, or almost support previously. And then what is the next level that I would be concerned about? Potentially this low here. So this was the previous low, high, higher. So resistance, resistance, support. So remember, it can interchange your support and resistance, and then place a trend line from this point to that point. Go in line with price action recently in that way. So I can see that the bigger picture is, okay, that from this low to this high, we've had an impulsive move, and then we've seen most recently a correction taking place. How far is this correction taking place? To have a better understanding, use a Fibonacci. So take a Fibonacci from this impulsive wave moving up to that high, or take so from the lowest low to the highest high. We're almost at a 50% retracement, so 50% correction taking place here. Yep. So going into now a smaller time frame, going into the 15 minutes time frame to better understand this, potentially you could place a counter trend line. So you could potentially place a counter trend line above the highs. So taking another counter trend line above price action, something similar to this. So that will be my counter trend line. Yep. So my view will be is, okay, so if the news was positive, so we've seen that, okay, it's below the forecast, which is negative, but it's still above the 50 level, which shows it's still expansion. It doesn't mean significantly much. Yeah, so we haven't seen such a significant move, hence why you got more of a sideways action, maybe testing the lows. Yep. But in addition to that, you may also even look at a secondary counter trend line. So draw a secondary counter trend line above the highs, something similar to that. Yep. So what we're looking for is price action to confirm not only that fundamental macroeconomic data, but also by checking the sentiment, so gauging sentiment and back testing, you can have a higher probability of a trade. So the view could potentially be is that we may see price action from these lows, a lot of buying pressure at these 50% retracement correction phase, break through to the top side, So let me just do that again with the correct color. Okay, so breaking through this counter trend line, looking for a buy signal in this range here. Buy signal back up to this counter trend line, so the primary counter trend line. This could be your potential target area. Your entry could be in this region here, and your stop loss could be placed below the low in this region here. So that will be the idea if you're taking trades based on macroeconomic data, gauging sentiment, and then back testing, and then finally your technical analysis. So that is how most professional traders will add to their technical analysis, is understanding those fundamentals and how those fundamentals have an impact in that particular market. Yep. And it doesn't come down to reading a book. So there's many books out there on fundamentals. You could buy those books to give you additional information, but to truly understand how it has an impact in the markets, to gauge that sentiment, it really does come down to experience in the markets. So look to learn, look to understand and see what takes place in the markets. Yep. So this will be one potential trade idea, guys, where you could take the news, understand what's being released and how it will have an impact. One key point I would want to mention is if, for example, for me to take the news instantly, so for me to take the news instantly in regards to when the news is released and I'll get in straight away. Yep. So ideally, always remember you want the decision, the actual results released, that decision to be made before you go on to actually take the trade setup. Yep. So do not look to trade before the news is released. Yep. Okay, so suppose, okay, the forecast was 51, so the forecast was 51.1. We know anything above the 50 level, so that's the 50 level, anything above the 50 is expansion, anything below the 50 is contraction. Yep. The news that came out was 48.1. So naturally this is below that expansion phase, is in contraction. Hence why we've seen most of the market selling off. So we have had more of a sell-off from these highs. So we've seen a sell-off from these highs, moving down to these lows in this here. But again, the technicals have been held. So a lot of buying pressure taking place over here. Yep. So if you look at the bigger picture, the view is that, okay, it's being supported at this key level here. That sell-off hasn't taken place as significantly as it originally was thought. That's because how far are we from this 51.1 level? Not as far as you'd think. Now the idea is if you have a forecast at 51.1, it has two parts to it. It has a high estimate, which could be placed at 52. Yep. Or it has a low estimate, which could be placed at the 48 level. So knowing that it has a high range and a low range is extremely important. Yep. So therefore you'd say, okay, even the news came out quite negative and it's within that contraction phase, but it's still within the low range estimate. It isn't as bad as we originally thought. Yep. So that's why when you see certain news that come out, for example, this actual news doesn't come out 48.1, it actually comes out as 42. So significantly away from 51. So it comes out 42. Now straight away I would think, okay, we've just broke through not only the expansion phase, we're now in contraction, but also our lower estimate range, so our lower forecast range, and we're at these extreme lows. That has not been priced into the market. So you have to remember that the market is a discounting mechanism. It takes in all the news that's out there right now, incorporates it into the price. And that's how traders base their trades, and that's where the market trades. Yep. So if this hasn't been incorporated, you would have seen a larger, significant move to the downside. Yeah. But because this surprise factor has not happened, I'd be patient. We're still within the lower estimate and wait for my technicals to confirm that fundamental and macroeconomic data. Yep. But that's where I would actually get into the market at as soon as the news is released, is when you actually see a significant surprise taking place in the markets. When a news is released and it's completely far away from any sort of sentiment that's gauged, far away from the lower and the higher estimates, you would have a larger move take place then. So that is the key point there, guys. Understand the markets better. So you need to understand the markets by gauging first understanding what news has been released, what it has an impact on, what is correlated to, what is the actual, what is the forecast, what's the previous, but in addition to that, what is the higher range of that forecast and the lower range of that forecast. Then you gauge sentiment. What are investor sentiment? What are the economist sentiments? Yep. What has been building up to that point? Then in addition to that, you look at the previous data and you backtest it. Look at the previous data and backtest it by looking at the charts to see what has taken place. Then your final step to bring it all together is do your technical analysis. Do your technical analysis and wait for a technical level to break through. When you have that technical break, it provides additional confirmation, increases that probability far greater than a very high probability setup. So increases that setup, not from taking a macroeconomic data news, going buy or sell, which makes it 50-50. You've now increased the probability by taking those steps and leading up to it in this way. Yep. So guys, this is the correct way of doing analysis, guys. Doing your analysis and incorporating news. Macroeconomic data has a significant impact on the markets. Yep. So just to give you an idea of why it has an impact on in the markets, the first key point I want to mention is that the market is a discounting mechanism. It is a discounting mechanism, which basically means that everything that's out there has been discounted into price. So whether it's positive or negative, you will see it reflected in price. So that is number one principle of auction market theory. Yep. So and Dow theory. So markets will discount everything that's available currently, except for the acts of God, which could be it could be a natural disaster, it could be a terrorism attack, or even something that's a surprise news, such as what we've just gone over, the example that we've gone over. Yep, and that will lead you to forming better decisions and understanding the markets clearly. Yep. So to give you an example, how markets can fluctuate and not always stay within technicals. So this is why technicals doesn't always work. The first key point is that large banks, they work for their clients. Yep. So their aim is to work for their corporates and their clients and take orders from them. And they will take large orders. For example, a company such as BP, so British Petroleum, they are UK based, so everything has to be done in pounds, but a lot of their income is received within US dollars. Yep. So it's provided in US dollars. So they have to now call up their bank and say that we're going to transfer $1 billion US dollars into sterling. And that bank has to now fulfill that order within and put in that billion, transfer that 1 billion over and try not to move the market as much. But naturally, if you're transferring 1 billion worth of dollars into sterling, it will have an impact because of supply and demand. So therefore, you'd see market move in ways that you haven't seen before, or it would not respect a prior level that you've had. Yep. So that's one way that the markets move against the technicals. And the second way is that if there is a surprise news, exactly what we just spoke about, for example, that we have this surprise news release and it's nowhere near the higher range or the lower range, that will have an impact on the markets. Or a surprise speech by Fed Chair Janet Yellen, or Donald Trump tweets something that has an impact on the markets. So there's a number of surprises that can have an impact in the markets. So yep, just be aware of them. So therefore, because that can happen, your probabilities are never 100%. This can never be a sure thing. So that's why doing the correct due diligence is important to increasing the probability of your trade. So yes, as a recap, guys, so understand the macroeconomic data. Yep, so go back, look at what's happened previously with news events. Yep, and if you don't know what those news events are, research them. It's important you go back the last 2 or 3 months and look at every single medium to high impact news that's being released on a daily basis and what it means to the market. Yep. A specific one key point I can mention is that one of my students was taking a DAX position yesterday, and due to there's a bank holiday in Germany, the DAX is closed, so it cannot be traded. So he's locked into a DAX trade which he doesn't want to be in. Yep, so knowing the economic calendar, just even knowing that, okay, there's a German bank holiday tomorrow or today, therefore, okay, I'm not going to hold this position, or I can't trade this position. Yep. So watch out for small little errors that you can make purely from not looking at the economic calendar. So look at the economic calendar, know what news is being released, and understand what that news means. Look at its forecast, look at its previous, and look at its actual. Make sure you know there's the higher estimate and there's the lower estimate, the forecasts. Yep. And then look at the previous data and backtest it. Backtest it and see what's taken place in the markets. How did it discount it previously? Was it a surprise effect or not? Yep. And then look at your technicals. Your technicals will let you know whether the breakout is going to be impulsive, or it's potentially ranging, or it's consolidating, wherever it might be. And the most important aspect to trading the news is gauge sentiment. So understand what is the overall sentiment of most large institutional traders. What is the sentiment of large banks? What is the sentiment of economists, heads of central banks, members of central bank committees? So gauging better sentiment overall will give you an edge in the market, especially trading the news. Okay, guys, I hope you enjoyed this webinar. It's a special webinar covering news trading and understanding macroeconomic data. Yep. So, yep. Take care, guys, and I'll be back with you on the next M Trading webinar.